Welcome to the Gap Gameplan training course. We will be learning how to trade gaps. I'm going to go briefly through the introduction and hopefully you will finish the course and have a very good understanding of what gaps are, how to trade them, and the ROI you can expect. So this is just going to be a quick introduction. Don't expect to learn too much, but do expect to know what you will be learning by the end of this course. I'm going to start out by introducing you to this course. I am Damon Verial. I'm the one presenting this. I am a gap trader. I am probably the only gap trader you can find online besides another guy who trades gaps in a different way. He trades gaps as a daily gap trader. I trade gaps as a, you could say, weekly swing trader or position trader. I hold them longer than he does, and generally I am making more than he is because we're working with bigger gaps. I want to thank, first of all, Udemy for allowing this course to be offered to you guys, and I also want to thank my friend Max Stryker for putting together all of the technical support needed to make this course. So I'm going to give you a quick plan for what's happening in this intro. I'm going to give you a brief background of myself. I'm going to talk about what your background is probably like or should be. I'll give you a 3-minute introduction to gap trading. I'm going to talk about the ROI, what you can expect to gain in terms of profit when you play my strategy. I'm also going to tell you what I'm not going to discuss in this course. And then we'll go into the minimum investments you need. And finally, we'll talk about the methodology itself. Now, my background is in statistics originally. I moved into psychology, and from there I decided I'm going to make money because I figured out you don't make a lot of money as a psychologist. So I moved into gap trading. It's statistics plus psychology, really. I am currently writing 4 paid trading newsletters, soon to be 5. So all you got to do is Google me and you'll figure out I'm a guy who's pretty much niched himself as a gap trader. Now, what about you? Why are you taking this course? And how much are you trading now? How much do you know about gaps? And how much of your portfolio do you want to dedicate to gap trading? Then you got to think about, do you need a primer quickly on what these basic terms I'm going to be using are in gap trading are? If you're a seasoned trader, this is going to be easy for you. If you're pretty new to trading, I recommend you go to a website called Investopedia. Whenever you see something in my course that you don't understand, Investopedia gives you 1 or 2 paragraphs as an explanation for whatever you're looking up. Now, I hope you're taking this course to either make a decent amount of money in a short amount of time, or just to hedge your portfolio so you're not stuck with one trading strategy. If you're trading a bunch of stuff now and none of them are gap trades, this is the course for you. If you know nothing about gap trades, this is also the course for you. If you know a little bit about what gaps are, that's fine, and you're going to learn a lot more from this course. Now, the last question is simply, how much of your portfolio would you like to put into gap trading? For me, it's about 1/3. You can say it's actually a little bit more than that because 1/3 is stock and 1/3 is stock options, and then my other third is penny stocks. So you've got to figure out your own trading strategy, how much of your portfolio you want to dedicate to gap trading, and you'll be able to make that decision after going through this course and seeing what gap trading does have to offer. Okay, so we got to start with what a gap is. Usually, people are looking at stock charts with the line chart, but the line chart doesn't really give us a good picture of what a gap is. A gap can be seen much more easily with these candlestick charts, and I've purposely chosen a gappy stock. I like to call that stock that has a bunch of gaps inside it a gappy stock. Not many stocks are gappy, but a few are. And a gap is simply an area between 2 candlesticks that doesn't have anything in between it. There's no touching. So take a look here. These 2 candlesticks touch. These 2 overlap. these two overlap. There's a lot of overlap over here. But we have a gap here, we have another gap here, one more gap here, and another gap here. Now, there are multiple types of gaps. I'm going to cover the bigger ones, the more important ones, the ones you can use for trading in this course. This here is called a continuation gap. And what happens in a continuation gap is we have a trend that's going one direction. Suddenly there's a gap that brings it down way, way further than it should have been, normally with that momentum. And we got a big space here. Now, a continuation gap, as you'll learn in my course, tends to widen. In other words, the gap gets bigger because the stock continues downward, and you can usually make a pretty good prediction that the stock is going to continue its bearish trend and make some money. So if you got on into this trade at the time of the gap where it was 94 bucks, and then you got out here, you would have made $10 profit per share. And if you're using stock options, like I'm going to teach you in this course, although you don't need to use stock options, you would have made, on average, I'd say $1,000 per maybe $200 investment. So you're going to get an ROI of like 500%, which is crazy. And this is why I switched to gap trading after playing with mutual funds and long-term investments for a while and not having much success. Now I'm going to give you a quick history of gaps. When people first saw gaps, they saw them as black swan events because they usually followed a news report or an earnings report, and it was kind of unpredictable to say the stock would jump to a certain place. And actually that is still pretty much true. You can see when the reports are coming out. You can see when the earning reports are coming out. But you can't predict if it's going, usually you can't predict if that earning report is going to give you a gap that goes up or a gap that goes down. So I'm going to say these are black swan events, they're pretty random. And we're not going to trade and hope for gaps. Instead, what we're going to do is we're going to trade after the gap and use what we know about gaps to predict the direction of the stock. Now, traders and academics, they have studied the statistics of gaps for a while, and we have a lot of data. The statistics of gaps allow us to predict what's going to happen after that gap, but we do need to know what kind of gap that is, and we want to improve the predictive ability of that gap with other methods, which I'll teach you in this course. Now, people like me use those predictions to get a lot of profit out of gaps. I personally make a lot of money off of gaps using stock options, but you don't need to use stock options and you can still get pretty good ROI off of this. And even if you're a conservative trader, gaps can help you get very consistent earnings. So I basically just skipped to the benefits of trading gaps, and I told you already the benefits of them. But one thing is that with gaps, we have safer bets than other types of analyses. Some people might argue with that, but I'm going to say, look, statistics are statistics. Your subjective idea of what's a good trading strategy can't really argue with numbers. So when we have all these statistics on gaps, why not use them? Why not at least integrate into a piece of your portfolio gap trading? And gaps are important because they represent significant price differences. Those price differences, like we saw in that last image, can be like $10. And if you're playing options, every dollar change, if you have an in-the-money option, will give you $1,000. So for example, $100 investment might give you $1,000. So these big price differences are what allows for a lot of profit if you're going to play the more risky method of trading gaps. And I'm going to teach you both, a conservative style and a risky style in this course. Okay, but here's one weird thing. Like I said before, you type in something like gap trading in Google, you're not going to find a lot of gap traders. The reason is there's a contradiction in what people say about gaps. And there are two quotes. Here they are. Always trade in the direction of the gap, and gaps always fill. What this means is if you see a gap, and it's an up gap, so the stock jumped in price, buy the stock. That's what the first quote means. The second quote means that if you see a big price spike because of a gap, sell the stock or short the stock. It's very strange. These are contradictory. But actually, both of them are true, and it depends on the type of gap. So that's exactly what we're doing here. We are looking for the gaps that will fill, we are looking for the gaps that won't fill, and we are predicting which are which, and then benefiting ourselves by making the prediction in the right direction to get the profit we desire. Now, what's the ROI you can expect for gap trading? It depends on your style of trading. If you don't know, ROI is the profit you get divided by the investment you put in. Personally, in my Excel file, I separate my trades, and I looked at my gap trades, and I have an ROI of 39%. This is not ordinary. By the way, ROI of 39% means I put in $1,000 for the investment, and I get about $400 back in profit. So $1,000 becomes $1,400. That's my average ROI. But realize I'm playing with stock options, which is a bit riskier. I've also been doing this for a while, so don't jump into my strategy immediately. Try to make your way into it slowly, kind of like putting yourself in a swimming pool. You don't want to jump right in unless you're a little crazy. Put your toe in, then get up to your knee, then get up to your crotch. That's usually the hardest part, isn't it? Well, move on slowly, and you can probably get a similar ROI that I'm getting if you're playing stock options. If you're playing with just stock, you're probably not going to get such a high ROI, but you will be playing in a less risky fashion. So either way, you're going to benefit in terms of ROI. It's just how much and how much risk can you take on. Now, not all ROI is measurable, but the gap trades I'm going to teach you in this course is. There's going to be a couple gap trading trades that don't give you a very reliable ROI, and I put that in the bonus section of this course. So if you're interested, you can go look in that section, because if you calculate the ROI in those types of trades, you find even though you didn't make a huge profit, the ROI calculates to infinity, which is just weird, right? Don't get excited about that. It doesn't mean you can make an infinite amount of money. It's just a mathematical thing. Okay, so the Gap Game Plan here offers you a bunch of different trading strategies. I don't really mind if you're a conservative trader or a very risk-seeking trader. I believe that this method can help you in either way, because I'm not going to offer just a single trading strategy. I'm going to offer you a single methodology of analyzing gaps, but I'm not going to say you must use one strategy. You must use a risk-averse strategy, or you must use my risk-seeking strategy. I'm going to show you both. And I should also point out what I'm not going to discuss in this course. We're not investing. We are position trading or swing trading. We're going to hold our positions open for as little as a week and as long as 3 months or even longer. But we're not investing. We're not buying stock and hoping it grows. We are putting money in a situation that we believe will move in a certain direction and then getting out once our prediction becomes true. I'm also not going to discuss market trends unless we're playing an ETF on the market. But generally, we're going to look at stock. And one advantage of this is if there's a bear market or a bull market, if the stock market crashes, we can still make money. If the stock market's doing really well, we can also make money. This gap trading methodology doesn't rely on what the market's doing so much. I'm also not going to teach you how to get rich quick. I'm not going to say, you take my course and suddenly you're going to become a millionaire. When I started gap trading, I did it based on statistics. I didn't really follow any guide. If I did, I would have followed my own guide, but there was no guide like this before. So, well, that's why I created this course. But the idea is, what I found out when I started gap trading is I had a set amount of money in my account. I put in $3,000 for gap trades. I'm like, I'm going to try this out. I can risk $3,000. Now, my account didn't grow, but it also didn't shrink. But technically, I was making money because what I realized after a while was I kept withdrawing money from my account. I kept going to ATMs and taking money from my account, but every time I looked at my account, it was still $3,000. So I was making enough money on that $3,000 to sustain my living style, to sustain my lifestyle and standard of living, and it was just kind of like infinite money to me. I wasn't rich. I was just living within my means, but it was amazing to me that this strategy was allowing me to supplement or even replace income from active income sources. Just making 1 or 2 trades a day and doing them before the market opens, which takes maybe 15 to 30 minutes, was allowing me to continue my lifestyle without having to worry about money. So that's the best I can promise you. Of course you can get rich quick. I have a stock trading newsletter, actually a stock options trading newsletter, and we recently invested $300 and made $1,600 off of a single trade. So obviously there's the possibility of getting rich quick, but I'm not going to promise you anything, and this course is not designed to make you rich. It's designed to improve your trading strategies so that you're making more money than the average trader. All right, so let's talk about the minimum investment. How much can you expect to put into the Gap game plan and make money? Well, you can play, that should be play, not plan. You can play gaps for as little as $5. I've done so. It's a very high risk strategy in that you're usually going to lose it all. So that's the minimum anyway. You can play for $5. I don't recommend doing that, and I'm not going to really teach you how to do that here, but you can do that. The more conservative strategies require more capital. So if you already have a big portfolio, then you're safe. Don't worry about the minimum investment. I started with $3,000, like I said, but I recommend you start with at least $1,000. You don't need $3,000. It's better, but if you have $1,000, you can play pretty much any gap trading strategy that I recommend in this guide. So here's the methodology, and this is what the meat of the course is going to be. We're going to find a gap that's tradable. Not all gaps are tradable. We're going to analyze the gap. We're going to figure out the direction based on theory, based on statistics, that the gap should be going, that the stock price should be going after the gap. But we're not going to trade based on that. We're also going to look at 2 other things. We're going to look at the candlestick patterns after the gap, and we're also going to look at other trends, other types of technical analysis before we make our decision. Once we make our decision, if it's going to be bullish, bearish, and sometimes it's going to trend sideways, and that's in the bonus section. You can actually make money off of stock that trends sideways on gap trading. But once you make that prediction, we're going to open a position. You're either going to buy stock, you're going to buy options, or play some other options strategy. When you do that, you determine when to close the position, and if your prediction pays off, you close it, you take your profit, and you take your wife out for dinner. So let's get started. That was the introduction. When you're ready, move on to the first section.